Welcome back to this quick demonstration. Here we are trying to play at the edges of time and price. We're going to slice the contract of a given instrument, in this case ES futures contract, into time segments, and we're going to do some automatic projections of prices. And these are going to be the curved edges of prices. Now we are going to see that a phenomena shows up here where we can see the retest interplay of the time segmented price, which can be used for retest and breakouts. I think it's time that we drop that tool with one click and we talk through this as we see the process unfold. The tool which we are going to consume for this discussion is triangular retest break zones. We don't have to do much here. Defaults are great, and let it come out with its presentation here. As you can see, what are we looking at is, as I mentioned, the time slices. Now these time slices, if you see at the bottom, they keep shifting because of the lack of complete circular momentum in the market. Which means, if you have probably listened to Gann's literature, loss of momentum. But we are applying the loss of momentum in the time zone. So that's why you see a shift of these brackets. And they'll keep shifting and they will keep rotating as the time rotates. All right, so what are we looking at here? We are looking at automatic placement of the trend lines which are going to be used in the future, and also the future means when these segments have passed by. So what happens in the prior segments, we use those segments to detect a certain criteria of balance points and we project them forward. So once these two time segments are over, these trend lines have been drawn. So the first simple use case is we're looking at a break of these compressed zones. Right here, market was coiling, it broke through on this long side. I'm not putting any oscillators or indicators which we have in level 1, which we have 4 of these. Now the break happens and we go long. Now you can see they also dynamically shift and breathe. This is how, if you look at the vortex, if you look at the energy, look at the spirals, they coil, they shift and rotate in multiple dimensions. So what we are doing is we cannot represent 4Ds on 2Ds. What we are doing here, as I said, we are trying to look at the loss of time momentum to find those balance points, do some projections, and those projections are going to be either retested or it will be used as a breakout. All right, so I showed you an example of breakout. This is another example of breakout. This is another example of this breakout. This is an example of retest and failure. This is an example of breakout, retest, rejection. This is an example of breakout. So this is example of breakout. This is an example of breakout. Now, one thing you have to understand is when you're looking at this scenarios, look at the triangulation points. They are self-adapting and also self-adjusting based on the frequency. You have to pay attention to only one thing in this, the starting points. So in this triangular scenario, the starting points are these three. So these starting point areas for this line is not usable until this segment is over, because it will shift based on the volatility ranges. So right here, the lines which are initiated from this time zone are going to be usable once the vertical line on the next time zone has started. That's the only thing you need to be worried about, because as the bars are rotating in this time rotation, this is going to shrink and collapse like here, right? It's going to be very small and it's going to shrink and it'll get bigger, and it will become frozen in time once this time slice is over, which means once this bar crosses over to the next time segment, now I can use this retest, breakout. This time segment is usable in the next zone. So all you have to look at is the prior zones. So this is the prior zone. Once this zone is completed, the triangulation of time and price and volatility is over. Once that is over, I can use it in the next segment. This is the creation segment. This is the consumption segment. So what happened here? Breakout, retest it, blown up. Do you see that? Now these three things will be usable in the next segment. Once this bar is closed, these three things are now ready to be deployed as a strategic move towards your initiated direction. Now this is doing on 3 minutes, doesn't matter, time doesn't matter on this, because time is man-made, as we always talk about. 1 minute, 3 minutes, 6 minutes. And now if you're doing geometrical measurements, then yes, it makes more sense to use 369 magnetic dimensions of price movement. So here we are. So there's nothing much to be said about this. We can go to the most recent activity as well. Now you know, this is the creation segment, this is the consumption segment. When this happens, when this vertical is set, when the bar flips on the other side, now these lines are frozen in time. So we can see how beautifully these lines are offering you. First it came down to the tick, held it, this one came to the top, now it broke down, sorry, it broke up, came down to the tick, went up. Now all you need to know, if you have Mandela vibrations, you know where those are coming. You also have balance imbalance oscillations, you know which direction we are trying to move. We also have the 12 and 1 oscillator that also gives you the direction. This gives you the structure and integration of time and price. Once the segment is over, these lines are ready, broke, retest, boom. Once the segment is over, lines are frozen in time, broke, retest, boom. These lines are segments of time and price are frozen in time. Once we flip on the next side, what happens here? It runs up into the zone and collapses, retest, boom. Now you can see a different vision of price and time and breakouts and the trends. Now you can see these things are now this is what I was saying. This segment is over. It is usable in the next section. Next section. This was the next section. This is where we are. So this is going to, in this section, until this time zone is over, this is going to expand and it can get extremely wide or it can get low volatility in the entire zone and it will stay compressed. So if you want to do one more example of volatility, let's do it here. It is all done automatically. But you can see this time is going to shift. That's the trick. That is the trick, because this is where the magic of GAN starts. I'm just scratching the surface for you. Here, as I said, volatility. In these three lines in this segment, volatility was compressed. Breakout happened, retest was given to you, and boom. In this big move, these three lines, which are starting from here, and from here, and from here. Each segment has three lines. So this one has one starting from here, one from the top, one at here. What is happening here? It is giving us the expanded triangle. Market breaks it, retests it, boom. It's happening at the very close tick level. We are doing it on ES, you can do it on NQ or YM, it doesn't matter. The reason being, this is market generated real-time information, which is offering us the dynamic nature of these time, price, and volatility points. So it's just a matter of getting used to it. So that's all there is to coach on this right here. 1, 2, 3. This triangulation was small because of the volatility was small. What do we expect? It breaks somewhere at this time. Broke, came up to retest it, went down. This one was a little bigger. Broke, retest, down. This one was much bigger because of the drop. So our representation of this is going to be different. So market came in, nothing going on. This one pretty much just went flat and sideways. After a big drop, the energy has to be consumed on the sideways action. That is pretty fundamental. Anyway, so we got this next one. These triangles. So let's draw this last one. I hope you're getting a theme here. What's going on? The trick is this time, slices. So we have these triangulations line coming. Once this segment is over, they're ready for consumption in the next segment onwards, and they don't go beyond segment. So this segment will collapse to this next segment. We can that's one thing we can control in the input. All right, so here these 3 points triangulated here. Market broke up, came down, retested. The top one retested to the tick, the bottom one, and this also projected this line for the next movement. You can see here these three lines. Market was there. After this was all done, in the next segment these lines are usable. Now in the next segment, what it is doing, it is holding. It broke out of this middle triangle, went up, held here, broke out strongly, went up. This one, market was nowhere near, so this triangle was not usable in the next segment. Then we wait. Then this next segment was produced. And once these lines were used, they are usable in the next segment. So this is a time segment based breakouts. One way to look at it, right here. Broke, just kept going. All right, this is where you can add some trend rango bars and trend or algo boxes, as you have seen in the prior demonstrations. This is a pretty big drop. Volatility is now consumed in this different direction. Then market goes. Now starting from here, in this segment, the previous one can be used. It went on and on and on and on, broke here, boom. So stop loss will be somewhere. You can manage all this, right? But you are saying how the market is actually, why the breakouts are happening, why the duration is going on at a certain point. All right, this segment is ready. Because of this segment is now ready for the consumption. In the next one, it tries to first break out, comes back in these lines, it goes there, it holds this line. You got that. This segment, once this is done, the lines are ready, it breaks out, retest, breaks out again. It just did quite a bit of 5 points. Now this is on a 3-minute chart. Time doesn't matter, as I said. All right, so you're seeing the structure of the market properly. And it tells you you're coming out of a big volatility time segment or a low volatility time segment. It's like the coil is compressing very hard, it's going to break out extremely hard, like here. Small time segments, rotations are going on. That means it's going to break out one way or the other big time. And it does. First it does a fake out. On the other side, takes off. This segment is ready. The next segment right away is a breakout. So this is how, on this time segment basis, you can make your choices and you can be involved in the market 23 hours a day if you are really excited about it. So that's all there is to it. This is a very large one. I think we already saw. Maybe we didn't see this. So let's see this one and wrap this up. You can see very big, large volatility in this time segment, usable in the next. Market first goes down, comes back, hugs it, tries again a few times. Now this, again, you need to understand a lot of things about trading, but you're getting an idea why market is doing what it is doing in a fashion not seen before. So here, came back hard. First it was here, came down, broke out. This is the same thing. This segment has converted our levels for the next level consumption, went out, stayed up only. This one is ready. When market is really coiling nicely inside it, breakout as you guys know, it can also serve as that apex breakout scenarios we have discussed earlier. So what do we see here? This segment is over. These lines are ready for consumption in the next time segment. It stays there, tries to break out, CAM comes in. Break out again. So you can see it is giving some hint which side is want to really run, especially at the hour of power at noontime and early open. Opening and closing, these are two initiative energies. You should look into that. Right here and here. All right, and London. So it is trying to break itself down here. So spending more time on the breakout on the bottom side. So, and none of them closed on the top. There was a peak here, but never closed. So now this is the perfect apex opportunity. If you tried it here, you can put a stop loss here, but remember we're trying to catch 1 to 2, 1 to 3, 1 to 4. I'm staying here. Breakout, let's stay here initially. And it was never stopped out. Boom. It break out here on the top side. Initially put a stop loss here and never got you out. Same thing, it broke out here initially. Stop loss is here. You double. If this is your risk, you're doubling it up, right? If this is the risk, doubling is the profit on the 1 to 1. But 1 to 1 is very large. This is 10 points. Same thing here. This was formed. It is staying on the bottom side of this time segment triangle at the bottom. So if it is here, it went up, it's trying to crash here. So what I will do, I will not put it here, I'll probably put it here. It's too wide in the center. There are 3 lines here to use, so I'll just put it here and see what happens. Let it play out and boom. It is telling you which side it is trying to go, and they will collect enough contracts and blast. I hope this makes sense. You can just do more volatility ones here because this is where the money is. Same thing here. This was on average compression before market opens. You can see here market broke up. Stop loss here. Got the huge move in 2 hours. All right, I think you got this idea. Simple, drag the tool name and drop it and you're good to go. Thank you so much.